Aviva. We are going to be talking Aviva Las Vegas. No way, it's Aviva Hong Kong this week. So many cool things come out of Toronto. I'm talking about Drake. I'm talking about The Weeknd. I'm talking about Mendez. And I am talking about Chris Wei. Chris Wei is the executive chairman of Aviva Asia, and he is the global chairman of Aviva Digital. He had his start in Toronto. He came out to Asia. He mastered the alphabet of insurance: AIA, AIG, ING, SGX listed, Great Eastern. He has been responsible for transforming the digital experience of the customers in these companies. Aviva could not keep their hands on him, and neither could we. So please welcome from Aviva. Here he comes. It's Chris Wei.
Good morning. Boy, what an introduction. Andrew, I can't handle that energy sort of first thing Tuesday morning, I tell you what. Thanks, it's great to be here. And I can't say I've mastered the alphabet of insurance, but for a start, give me a sense of who's in the room. Who works for what we would consider a traditional insurance company, a legacy insurance company? Okay. Who works for regulators? Anybody? No regulators in the room. That's good. Anybody who works for what you would consider a digital startup business? Okay. Anybody who works for a consultant? There's a lot of gaps in the room, which is sort of classic of a Hong Kong audience, but that's okay. It gives me a sense we've got a fairly balanced audience, so that helps me sort of gear my comments to you. So what I'm going to talk to you about this morning is about disruption, which is what you would expect to see. And it's going to have a little bit of a slant in terms of a 321-year-old insurance company trying arrogantly to say, we're going to create a new model for our industry. Now, my comments start off by saying it's extremely arrogant. But let me give you a sense. I mean, I've been in the insurance industry my entire life. Most people accidentally fall into insurance. I'm one of those geeks that actually took a frickin' course at University of Toronto in actuarial science. So yes, apologies, I am an actuary. If there's an actuary in the room, give me a whoop whoop. All right, we got one. Yay, Annette, thank you. So I am trained as a technician, right? And it's important because I can actually understand the nuts and bolts of how our industry works. But let me give you a sense as to how complicated we make things for our own customers. So I'm Torontonian. I still have my house in Canada. We moved back, 15 years ago to Asia, and I've rented it out since. And if I weren't a customer of Aviva, or an employee of Aviva, I actually would have trouble finding insurance for my property in Canada. Problem number one. Problem number two is we actually recently had a bit of a flood situation. We had a lot of snow in Toronto, it melted, and there's a thing called sewer backup in Canada, which means a lot of snow melts, the sewers can't handle the volume of water, and the water backflows into your house through the basement. Now, I was lucky enough that I bought something called sewer backup rider, right? If I didn't have the sewer backup rider, my basement damage wouldn't have been covered. But my claims person was very keen to understand, did the water coming through the window from snow melting, which would have been overland water versus sewer backup water? And frankly, as somebody who's been in the industry 25 years, I was just left thinking WTF, okay? So we don't make things easy. And by the way, if you read that insurance policy, it's fricking circular. And I did talk to our claims guy about it. I said, why do we make it so complicated? I'm not a lawyer. My wife's a lawyer. She can't understand the policy. I've been in insurance for 25 years. I can't understand the policy. How do we expect our customers to understand the policy? He says, yeah, you know what? When new stuff happens, we kind of figure out language and we bolt it on. We don't actually redesign the whole policy. Now, there's a fundamental truth about our industry. Okay, so we recently, our board, PLC board, did a fantastic reputation survey. Okay, and none of it's going to be mind-blowing in terms of insight. But let me remind you of some universal truths. So number one, in the absence of innovation, customers will default to size, especially in the insurance industry. Okay, this is not rocket science. So if I don't see anything very, very unique, I'm going to go with what I think is the biggest company, because we are selling financial security. Now, therein lies, bluntly, what Aviva did wrong for the last 150 years in Asia. We followed the leaders. We didn't innovate. Now, if you follow the leader, guaranteed you're not going to win. you're just not going to win because you can't compete on scale, you can't compete on price. You'll lose too much money. The only way to win is to disrupt with innovation. You with me? Make sense? Nobody's nodding, which is shit. Believe me, that is the case, okay? So let's talk about a little bit of disruption, and you would all have heard about the Netflix on Blockbuster stuff. You would have heard about, let's say Uber on the taxi industry. But let's not talk about Uber. Let's talk about Didi in China, which I actually think is the most impressive transportation company in the world. So Uber and Didi, this is 2016 stats. This is off a public article. Don't quote me on the actual stats because I'm not here to tell you about it. I'm just here to contrast Uber and Didi from a publicly available source. So they're both in about 400 cities as of 2016. Uber is global, kind of international. Didi is just in China. Uber thought they were the biggest taxi company in the world. They say that, 1 million rides a day. Didi was doing over 20 million rides a day. Uber had about 1 million drivers, 160,000 drivers. Didi had 14 million, okay? Now, this is the bit that really floored me about Didi. When you talk to their CEO, they will say, we're not really a taxi company. If you think about our operations in Beijing, we operate in a geographic area 5 times the size of New York. We've got the population of Canada in a city with terrible traffic conditions. So they're actually a data analytics company. They can predict with approximately 90% accuracy where the demand will come from, and they bring the cars there first. They're an analytics company, not a transportation company. Now that is a long way of introducing what I'm actually about to talk about. Because a traditional insurance company, if you think about your business, how you've always thought about it, then I think we will be disrupted. So there's an age-old saying, insurance is sold, not bought. Who's heard that before? Yeah. How many global CEOs of insurance companies have said that? A lot. Okay, so we don't believe that. We think it's being done wrong if we have to push sell you. That means we haven't understood your needs, we haven't delivered the way you want, and there's a fundamental flaw in that belief. So Aviva is waging war on that belief. So the old ways, of course, industry players want this, okay? It protects margins, it's simplicity, they've got a lot of legacy systems. Customers just don't know better, okay? Customers need an agent to explain really complicated products. So I recently, this week, did a lot of market research because we are about to go with our new operation next year. And I did some comparisons on pretty basic stuff like critical illness. And it was complicated, right? And again, I looked at those illustrations and I thought, man, a normal customer is going to need somebody to teach them this crap. But it doesn't have to be like that. So there's an old and there's a new, or I should say there's an existing way of doing things and there's a future way of doing things. So segmentation is one of my favorite topics. It's a pet project of mine. And Aviva guys used to come to me and say, oh, by the way, we've got 21 segments for the UK population. And I would say, not possible, okay? That means you've got 21 general descriptions that are gonna be useless in terms of digital marketing. Because just knowing somebody's aged 45 that lives in this area, might drive this car, may have this sort of income, is not enough to do any exact targeted messaging. All you're gonna know is they're kinda like this person, right? And big, huge assumptions behind it. There is an infinite trove of data now, lifestyle data, behavioral data, social data, that is not that hard to get. As long as the customer gives you access, that gives you incredible insight. Just watching what my son follows on Instagram gives me great insight as to what his actual passions and interests are, for example. Insurance companies, most of them don't use that. Insurers' offerings, right? In the past, it was, product-focused as opposed to really needs-based. So can we actually develop propositions that address real pain points? Underwriting. This is a big one for me because we have relied for the last 320 years on closed-loop risk data. And we believe that's going to take us forward. When the reality is, there's so much more valuable information that proxies behavior and risk and does a better than what we have, if we don't realize that, then we are going to lose the battle very, very quickly. So for the industry to think closed loop is all there is, maybe for a few more years, but there's going to be an increasingly opening up of information, okay? Whether it's we are talking to the NHS in the UK, talking to the Ministry of Health in Singapore. There's open banking coming, which means, by the way, in the UK, anybody from the UK? Okay, we've got a handful. So you guys know, come January 1, if you want to, you can give access to any other company, access to your credit account information. Sorry, current account information. That insight, whoever you're going to give it to needs to earn that trust and needs to give you enough reason for you to grant that access. But it fundamentally changes the game for banking. PSD2 in Europe's coming a year later. Okay, trust me, this will be a big tsunami trend. Governments are going to have to look at whether it's right for financial institutions to own the data, which I don't believe to be the case. Really, it should be the customer owning their own data. And increasingly, there will be a trend towards opening up that data for the customer, okay? So privacy was step number one, right? Understanding how you use that data is number one. Step number two, and it won't be the end, will be increasingly so, how do we actually put back the control of your own personal data in your own hands? Service. I can, again, tell an anecdote. In the past, and past is in bold, underlined, italicized. In the past, if you had 3 products with Aviva in the UK, you'd have to call 3 call centers. Each call center would probably take about 30 minutes. You'd take an hour and a half to change your address because you had 3 products with us, because we were that siloed, right? And we charge you for it. So those customers would be running back to say, you guys are awesome, right? No. Actually, that's why we didn't do a lot of cross-sell. Okay, we have to fundamentally rethink the customer experience. And for a large organization, that means, very painfully, you need all systems to talk to one another. Okay? Claims, you know, again, there's a lot of progress being made on claims. How do we make claims absolutely frictionless? Okay, we're trying to get it to where you don't have to fill out any forms, where you really don't have to answer any other question that perhaps what happened. Payments. I'm sure there's going to be a question on why we're partnering with Tencent. Just look at Tencent's dominance in China. Their platform, a part of that is because they have dominated retail payments with WeChat Pay. It's going to be instant, it's going to be simple, it's going to be easy, it's going to be a swipe going forward. It's not going to be painful, old-fashioned ways of doing payments. So again, I'm not going to go through. This is just some examples, really, around there is a drive forward, right? Now, the Hong Kong government administration is being really clear as a services-oriented economy, which is what Hong Kong is, which is what Singapore is. You need to embrace technology. You need to embrace innovation. You need to embrace this whole sector because that's where the new jobs are. That's where the opportunity is. And Hong Kong won't maintain its leadership position as a financial center, as a center for services, if it doesn't embrace this. Similarly, I think we all, as industry players, have to move at the same pace. So this is probably, hope I'm okay on time. This is really where it comes down to the crux of the discussion, okay? We thought we could have digital being run out of IT. Okay, it's a very, very different discipline. We didn't realize that for the first 6 months, by the way. Yep, I'll admit it. Okay, so we had IT developers trying to do digital. And actually, we only recently, well, I would say in the last 18 months, truly realized the importance of hiring the right capabilities in order to drive that digital agenda. But let me start with kind of how legacy companies work. The first year of trial for Aviva doing digital, we kept it with our legacy operations, which means country CEOs, we told you digital's important, go do. So of course, nothing got done because CEOs would think, wait a minute, I can throw 20 million into a hole, I don't know what I'm going to get out of it, or I could put 20 million into a broker promotion or an agency recruitment drive, and I know what I get back. So you'll never get the new. You'll always get more of the same. That's just an organizational behavioral thing. Especially if you're listed, you got 3-6-month kind of metrics to follow, that's where it's going to go. Okay, so the first thing Aviva did was we split digital. I mean, all the way up to the PLC board level, we split it off. So I report to Mark Wilson, who's my group CEO, who reports to the board. Okay, if I had any matrix connection back into the traditional businesses, it wouldn't have worked. 2 is, we don't spend a lot of time debating business cases. Okay, we've got a budget. We do what we think is going to be the most impactful. We do a lot of tests and learns. We don't do 18-month-long projects in IT anymore. We do daily drops now, and we're always optimizing. Okay, now this caveat, you've got to build some foundation before you can do that. But instead of trying to fix the whole thing at one time, it's about minimum viable product, get it out there, continue to optimize based on what the customer feeds back. Because you could be spending a lot of time and money and resources on stuff that doesn't really matter. The customer doesn't really care about. So the first thing, again, right, data. Data is going to be king. Data is key. And in the past, we would think about customers as policy numbers. Okay, so probably the biggest investment Aviva's made is going from legacy policy number-based systems to a single view of customer that is the universal truth for Aviva. Really important. I know you guys get that, so I won't go too much into it. Marketing, again, the old style of marketing. I'm going to get an agency to do a campaign. I'm going to budget $50 million. I'm going to do a big campaign on traditional media. And again, it's a little bit of I hope for the best. Nobody can really tell you with precision what your return on investment is on that marketing. Okay? So if you look at the most impactful startup companies, they do it socially because naturally it's such a great service, people want to share it. So I don't even have to go through the logic of linear one-way communications versus a social sharing referral mechanism. That second option is always going to be a lot more powerful. Product propositions, again, I'm an actuary, but I would say the way we do products is really geared towards channel promotions, whereas we really need to work in terms of an end-to-end proposition. Now, what do I mean by that? So again, we have a specialization. Every digital company has a specialization that we call digital product design, which is how you design apps, right? Google famously had people staring at a screen, and they were trying, and you know how simple the Google home screen is. Little minute details that would still impact the actions of the user based on the color of the button, the placement of the button, right? All those little details. That is a discipline. That is a skill set, and you need an obsessively compulsive design person to help us do that. And we have a great one, right? We had a chief designer that came from Call of Duty. So he was a gamer, but now he's helping us do digital product design. The other bit around proposition is you know, how can we do it so that customers would be thinking, wow, the surprise element, wow, how did Aviva do that, is actually what we want to do. We want to constantly surprise and delight our customers. Infrastructure. Startups don't have to worry about this. You can start up a new business on the cloud like that. Legacy companies do. So the pain of moving from legacy data centers into the cloud for traditional insurance companies is a pain. Have to do it, we are doing it, but you know, that's a transition. Customer service, let's move to a self-service, really responsive approach. 99% one touch, let's get it done. Self-service 24/7, any device of your choice. Again, that's all functionality build that costs a ton of money. Startups take it for granted. Legacy companies have to invest to do that. And talent. Actuaries versus data scientists. Okay? Actuaries are trained to look at historical patterns, extrapolate into the future. That's what I was trained in, stats and all that good stuff. Data scientists are trained to manage unstructured data. And the example I give is very simple. Let's say you've got contact center information. Contact center, and a customer might choose to come to you online only. Customer might choose to come to you through an agent or an advisor only, or through your apps only, or through call center. And they're doing stuff with you, obviously. Translating that information into record keeping that is efficient and insightful in itself needs an algorithm. In itself is data science. Actuaries don't have a clue how to do that. So what insurance companies have built a really strong muscle around is what I call risk analytics. It is, if you drive a red BMW, maybe you're 12% more likely to have an accident. That's what we're really good at, okay? We don't have a clue in terms of really how to turn unstructured data into insightful things. So if you try and get an actuary to do an best action, why do you think insurance companies haven't blown that out of the water? Wrong skill set. So insurance companies need to invest in new skill set and actually have those teams come together. We have a 400-strong global practice called Aviva Quantum that does that. And I think it's fundamentally important, probably the most important practice we have in the group. Just mindful of time. So this is perhaps how we should be thinking about the world. Insurance should be bought, not sold. And I think that's the fun challenge we have ahead of us. Thank you very much.
All right, Chris Way, thank you very much.
Thank you.
All right, ladies and gentlemen, we're going to be moving some furniture. Chris Way is going to stay up here because now he is going to go in the hot seat. He's done some work on his feet. We're going to let him sit down for a little bit. We're going to be welcoming to the stage his Inquisitor. This is Matt Dooley from the Connected Group. And what does Matt do? Well, he's connected. I mean, Matt has been instrumental in helping us to pull this event together and helping to bring the speakers out, helping us with the intellectual formation of it, working hand in hand with the NexChange team. We've been really excited to work with him. He is one of the two godfathers of the FinTech Mafia, and he's got the cufflinks to prove it today. Please welcome your Inquisitor coming up on stage, Mr. Matt Dooley.
Thank you. Thanks, Chris. Terrific. Can we do a selfie?
And before we sit down, once again, if you want to find your photos from FinTech Week, go to fintech.miro, right? .io. Take a selfie, and it will find your photos from the bank of over 3,000 from yesterday, another 3,000 today. And Matt's going to show you how his selfie's done. Here we go, people.
Okay. Can we all give it? Bit of action behind.
All right, people spending in the front rows, hands up, hands up, people.
Okay.
All right, that's the way it's done. All right, so make sure you get your photos and get ready for Matt Dooley and more Chris Way.
Thanks, everything. Thank you, Chris. Hey, Matt. Yeah, it's a hot seat. Over the past 2 days, I've had bank insurers, I've had regulators actually ask me to ask you questions.
Sure.
But these are my questions. I first came across Aviva when it was Norwich Union, and I was working in the UK. And Norwich Union were the first kind of platform for insurance in the UK. They had a web platform that a number of banks did bank assurance on. But you, in terms of Norwich Union, could actually see what worked and what didn't work. Was that the start of the journey? And are you trying to become the platform?
The answer is yes, yes, and yes. We really doubled down on digital about 2 years ago. We set up Aviva Digital separately, and again funded it separately and drove it separately, and now we've got about 1,000 people in the UK dedicated to digital. We've got garages in Singapore, and my Asia MD is here today. We've got garages in Toronto, in Warsaw, in Paris, in Istanbul. So it's a global thing now for Aviva. The platform point is, if we didn't have, again, that universal single view of customer that became the sort of the dictum of the organization, then we'd be very inefficient. We'd be building many, many different instances of the same thing. So in order to get Aviva into their own platform, actually the byproduct of that is that we're definitely trying to figure out whether we can be a much broader service-oriented platform going forward.
And in the UK, do you still have those white label kind of solutions for other players?
We do. One of our most successful digital businesses in the UK is a business called Quote Me Happy. We just crossed the 1 million customer mark. This is a 4-year-old business run by circa 35 people.
Yep.
And it's an awesome, efficient engine, right? It's great for lead generation, and that's grown in a flat, fairly low single-digit growth market in the UK because there aren't that many new cars, there aren't that many new households. You know, we're growing way like 5-6 times market growth, which is I think a proof point around the service.
So is the digital garage a collaboration tool? Is it an investment? Is it a design house?
It's all of that, actually. And I have to qualify, the garage thing. We didn't copy Apple or anybody that started their business in a garage. We actually, literally, the first building we rented or bought was a garage, and we converted it into our digital center. I would say the most important thing around that is just getting the right talent together in a space away from the legacy insurance company so that they could literally visualize the future.
And how do you feed those ideas and everything back into the group?
By saying the only people building digital are going to come out of that center. So no traditional business is allowed to invest or do stuff in digital without clearing it with the central hub.
Now, you've been investing in fintechs, and Aviva Ventures have invested last week in a robo-advisory called Wealthify. Can you tell us a bit about that?
Yeah, I love the concept of Wealthify. For those that don't know, this is a startup from Cardiff that, in their language, they want to democratize investment. So it's a direct-to-consumer investment platform. So in the UK, this is important. And what they want to do is make it really, really simple. They want to take away the scariness of investing. And so they do a risk assessment using very friendly questions. They explain their solutions in very simple language. It's very low cost, and you can start investing with £1. So we saw that, and we said, okay, the problem with that model is it's very attractive, but their cost of acquisition is too high because nobody knows Wealthify. So if you took Aviva, and we've got 15.5 million customers in the UK, we brought it together with a great service, could turn into something that's fast growth. The other bit is we get a team of 40 people that are very, very capable, passionate about this, and we don't have that capability. So it was realizing where we don't have skill set. It was realizing that it's faster sometimes to buy or invest than to build our own. And we're going to try this.
So you're the global chairman of Aviva Digital. What are the most exciting things happening in the world, and which markets do you get excited by?
I'm actually really excited about what we're doing in the UK first, more because we are the furthest ahead there. It's our biggest business. We do well over 1 million policies digitally, just to put some scale around it. We are now across the composite. So people are surprised to hear that we sell life insurance directly. We sell health insurance directly. We do the easy stuff like travel, home, and car we've been doing for a long time. Actually, surprisingly, investments is very hard to crack. Again, this is a UK-specific thing where a lot of people aren't comfortable with their investment choices. They find it really scary, really complicated. And again, that's what we're trying to disrupt. So to the point, we're trying to see if we can reinvent that. But at the very heart, I would say the core IP we're building is to eliminate questions. And the journey started with if we knew that Matt already had a car insurance policy and you were applying for something else, why should we ask for your name, address, identity information, et cetera? We shouldn't have to do that. That was actually the first iteration of that thinking. And actually, our guys then went and say, it doesn't matter if you're asking 130 questions, 60 or 15. The bounce rates are still well over 50%. People just don't want to answer questions. They don't want to fill out forms. So the other thing we did was, how do we eliminate questions? And actually now, if you're an existing customer of Aviva, we can pretty much offer you most of our products with 0 questions asked. We actually went as far as doing a pilot with Google in the UK, where you just type in home insurance, and we can give you a guaranteed quote. And if you wanted to buy it, you click through, your quote form's already pre-filled out, and you can buy. The failure in that pilot was not Aviva, because we can price every single property in the UK. The failure was Google Locations was not precise enough. So anybody who's used Uber, you know that Google Maps is not perfect. And when we price down to our water flooding risk maps are down to like 2 meters of precision. So when you're off by 20 meters on Google Maps, we might put you in a different house. We might, misprice you. Actually, that was the problem. So now we're out looking for startups that can help us hone location to a sufficient accuracy. But we did that to prove the concept. We can eliminate questions.
There's a startup here in Hong Kong that might be able to help you. So Aviva Hong Kong, you've been in Hong Kong for 150 years. In January, you announced a JV with Tencent and Hill House Capital. Where are you at with building out Hong Kong as a business, and what's it going to be?
Caveat is I can't say too much about that. What I can say is that the regulatory change of control clock started ticking June 26th when the OCI became the insurance authority. So that's actually when the application went in formally. There was a bit of no man's land for a period of time. I would say that's progressing well. We are now very actively thinking about our launch plans and what our initial proposition will be. Some of it, and we don't have a regulator in the room, but we've talked to everyone in terms of the Hong Kong community, in terms of any government department that's got any connection in to financial services, innovation, or digital, we've talked to. There's a universal alignment that we need to progress this, right? We should give Hong Kong consumers choice. We should give them efficiency. We should give them a simpler way of doing things. And everyone we talked to wanted the product that we were describing. So there's a strong support behind there. Some of it is just a lag between what's in place today as regulations and what needs to be. So identity validation, right? AML, payments, whether you actually need to do a full traditional paper-based F&A when you are selling a savings product. And just to be a bit provocative this morning, because Matt, you bring that out in me, I would say perhaps a lot of the guidance notes today are built around products that are not great for customers. So those guidance notes are to make sure the customer knows what they're getting into, as opposed to really guiding what should be the right products for customers.
Wow. In terms of, well, some people have said that you've actually invited the wolf in sheep's clothing to the insurance dinner party. You've always wanted to disrupt the industry. Do you think Hong Kong is a great place to start that disruption in terms of new models and new partnerships?
Absolutely. So I'll do the wolf thing first. and we have a lot of passionate debates around, have we done that? And I would say it's an irrelevant question because they're coming anyway. So I'd rather dance with the devil than not know. We have existing relationships with global leaders in digital. For example, in the UK, if you want to settle your claims through Amazon, we have a direct partnership with Amazon. If you want your appliance to be delivered to you next day, we fulfill that directly through Amazon. If you want an instantaneous claim payment, we give you credit in Amazon, okay? So we're used to dancing with the devil. In terms of Hong Kong as a disruptive geography, I can't think of a more traditional market.
And that's because the story about fintech and disruption in China is all about the changing customer behavior, the mass behavior. So from old people to young people, they use the mobile phone for absolutely everything. They live by the phone. In Hong Kong, we are the most connected market. However, in terms of usage, we lag behind. And that could be because of geography. But how are you going to educate the local Hong Kong people to actually do everything with you via the smartphone?
I don't think it's an education. I think it is if you give good enough reason for people to change their behavior, then they'll change their behavior. It's got to be a better outcome for the customer. So if you think back, Octopus was a convenience, right? But that's not an optimal service because who's hooked up a credit card to their Octopus? Do you enjoy that experience? Okay.
No. After I do.
Yeah, after you do, but to actually do that is a pain. Right? You got to fill out a form. You got to put it. You got to then go back, right, to the customer service and actually get that. I haven't done it for a while, so I can't remember the exact details. I remember it was a pain. So, but now you use that. But even that, unless you hook it up to the credit card, the top-up's a pain. My point is payments has lagged in Hong Kong. Payments has not moved forward. Now, there's a really interesting phenomenon here, okay, which is credit cards versus e-payments versus something like an Octopus, all right? And I think the biggest challenge for digital payment providers is how do you make that so attractive that people would rather put down their credit card and just go with their phone? Now, what we're trying to do with Tencent is give a phenomenal proposition so that people want to use their e-wallet. Okay, now, I can't tell you what that proposition is today, but we are certainly working on something that I hope will be compelling enough.
And Tencent are one of the new 5 licenses for the stored value cards. So they're entering into the payments here. In terms of experiences, where do you get your inspiration for the best customer experiences?
By listening to complaints, actually. So, you know, the examples I gave around what it takes to change an address, you know, floors me. Those things have to be fixed. And I would say it's easier to work on things that my colleagues will collectively go, that's not really what we do, is it? And you don't really debate it from there on, right? Because I think we all understand when you deliver a bad experience, you're not inviting loyalty, you're not inviting customers to do more with you. And, you know, without disclosing details, we looked at our RNPS score for digital customers versus intermediated customers, and the difference is 40 points.
Wow.
Yeah, so that tells you something.
In terms of partnerships, you mentioned Google in the UK. Well, you've got Tencent with Zhong'an Insurance, and Zhong'an have done a lot of non-traditional products, like the shipping insurance, the delay with travel and stuff. Are you moving into those kind of products where you're actually meeting unmet needs because no one's got, but you need the data source?
Yeah, I actually look at it the other way around. I think the brilliance of Zhong'an, and we won't debate profitability or all that stuff, right? The brilliance of Zhong'an is, if you think about a retail shop, so let's say you own a supermarket, okay, and you have one front door, then you're attracting walk-by traffic through that one front door. You do a side door, you do a back door, you just created 2 other entry points into your store. And my guess is, based on traditional retail economics, you're gonna get more customers, okay? And then you figure out the experience in the store. What Zhong'an has done is opening up billions of entryways into their platform. So from a customer acquisition perspective, I think they're brilliant. Now, did they have fantastic backing? Alibaba shipping? Absolutely. Anybody who's bought an Alibaba product is going to have that offered. So hundreds of millions of policies were sold that way. But what I do admire about Zhong'an is they don't probably spend a lot of time debating, is this a good product? They'll just throw it out there and see. I think they're going to get to a point where they're going to need more real insurance risk capability and really understand what they're getting into. Because you know, there's some things that I see them doing that I would go, how do they do that? As an actuary now, and we'll see whether everything they're doing is right.
And that leads nicely onto what I was going to talk about next, is about distribution. And with complex insurance, there's always a debate that you actually need a human to actually sell it. Are you able to simplify the life insurance policies and everything to make it so easy that even my mother could actually get a life insurance through you?
That's the goal. We are literally trying to, and what we have done is we proved we can sell anything in the UK to an existing customer. Now, again, there's a big caveat there because we know a lot about our customers in the UK. But what my point is when you make it simple enough, when you make the journey frictionless enough, people are very, very much willing to buy digitally. They don't need to go find an IFA. I think when they need an advisor is when they look at what's available to them and they're confused. That's when they need somebody to help. Make sense? And I would say I'm not saying, by the way, don't get me wrong, I'm not saying there's no role for face-to-face agents or advisors. There definitely is, but not the way it is today, right? So there's going to be a big swath of the marketplace that are very comfortable being self-directed, that are looking for control and value and choice. And I think we're looking to make that pie bigger, and then we're hoping to attract as many of those people as we can.
Let's open it up for a couple of questions from the audience. Is there anyone that would love a question to ask Chris? No questions? Okay. I'll mention one. So in terms of what's happening in China, you recently did something in Vietnam in terms of a new JV. What is the next market after Hong Kong or with Hong Kong that you're actually looking at? And how is that market going to leapfrog with digital?
That's a great question, actually, and it goes back to one of our core strategic anchors. Aviva planted flags with the expansion of the British Empire way back when.
Yep.
Okay, and I'm going way back in history now. And that didn't work pretty well. That didn't work particularly well. And there was a very erroneous assumption that you plant a flag, it's a growth market, everything else takes care of itself.
Yep.
Clearly it doesn't. I would say our competitors have done better in terms of consistent investment in emerging markets compared to us. So what's working for Aviva now is to really focus on the markets where we think we can have a top 5 position at the very least. Okay. So we have announced changes to our footprint, right? We've announced some divestments. So in terms of Asia, we are definitely focused on 2 wealth management centers, which is Hong Kong and Singapore. And we're focused on the big populous countries, which is China, Indonesia, Vietnam, and India. And we think that's more than enough. We can crack and go deep in those markets. I think we're leaving a pretty decent legacy for our successors.
Terrific. Well, we're running out of time here, but I'd like to thank very much for your keynote and also for your time here to answer my questions.
Right. Thanks,
Thank
Matt.
you. Chris Wei.
Thank you. Thanks.
Matt Dooley, masterfully done, like a fintech godfather indeed. Chris Wei, thank you so much for coming out and joining us.